Anyone who's hoping house prices would crash over the next 12 months in Canada, well, their plans suffered a bit of a setback last week due to a trifecta of announcements that are relatively bullish for housing. I'm going to unpack all of those today. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make better real estate decisions. If you'd like to meet with me or my team, just click the link in the show notes below or send me an email at askjohn@movesmartly.com. So last week was a very big week for housing. There were several huge announcements that can influence and impact the path of home prices. Maybe not immediately, but at least over the next 6 to 12 months. I'm going to unpack all of those. So kicking things off, the first thing dropped like a bomb Monday morning. The federal government announced major policy changes regarding mortgages. And that was the first big announcement. So there's a couple of big things that they did. The first is currently anyone who wants to buy a home up to $1 million can do so with less than a 20% down payment. It's probably closer to 7 or 8 is the minimum. They would just need to get mortgage insurance through CMHC, our housing regulator, or one of the insurance providers, default mortgage insurance. Anything over 1 million, you need 20% down. You don't qualify for mortgage insurance, and you need a minimum 20% down payment. So that $1 million threshold, a lot of industry insiders were pushing that to be nudged up to 1.25 million. The federal Liberals housing plan leading up to the election basically argued that they're going to increase that from 1 to 1.25 million as prices have increased. But they went one step further and increased that threshold to $1.5 million, which means now you can buy a home up to 1.5 million with probably close to 8% down, which is just quite surprising. I mean, like I said, no one in the industry saw that coming. It was a big shock. So that was the first huge announcement. Now, of course, you still have to have the income to qualify for a mortgage, and most likely people are not going to be buying $1.5 million homes with 8% down, but 15%, something along those lines, very possible. Something that wasn't possible, isn't possible now, and will not be possible until these rules come into place in December. So that was the first big announcements, and all of these will effectively be impacting the market in the new year. I think they come into place December 15th. The second announcement is that they allowed first-time buyers to basically amortize their mortgage over 30 years rather than 25 years. And again, this is another big policy measure. I mean, the Liberals position this as allowing people to just lower their mortgage payments, rather than, borrowing $500,000 and paying it over 25 years. They're going to pay it over 30 years, reduces their mortgage payment, reduces the burden on their income. But the reality is, most buyers, especially in expensive markets like Toronto, don't do that. Typically, what they do is they just end up borrowing more. Their payment stays the same because they're borrowing more money, but stretching that payment out over a longer period of time. So this effectively increases people's home buying budgets. It's stimulating it by encouraging more debt, given the same income that households had. So it's basically kind of a policy that will kind of contribute effectively to stimulate house price appreciation as people spend a little bit more. They had another policy that allowed all buyers to get 30-year mortgages on new construction. I mean, to me, that's a smaller policy. It's not going to have a huge deal. I think academics think it's going to stimulate supply. I don't see that happening, not in any meaningful way. The condo market's not moving right now pre-construction because just prices are too high. It has nothing to do with 25 or 30-year mortgages. So those are the big mortgage announcements. Again, that's not going to come into play until the new year. So we'll likely see those policies impact the market in the new year. The other big announcement that happened last week is that inflation in Canada hit 2%. Now, for those who aren't familiar, the Bank of Canada's target for inflation is 2%. They have a band between 1 to 3%, which they're comfortable with. I'm going to show this chart showing inflation in Canada historically, I think since back to 2014 to today. So we can kind of see, obviously, it surged. Now it is back down into the band that the Bank of Canada is comfortable with. in the longest time, they've been arguing and signaling that they're not going to lower rates until they're confident and comfortable that the inflation rate is within their threshold. So unless they see some really alarming news that inflation is going to surge, we can expect more rate cuts in the months ahead. Now, speaking of rate cuts, the third big announcement is that the Federal Reserve in the US cut their policy rate by 50 basis points. So that's 0.5%. The Bank of Canada has been doing 25 basis point cuts. So again, this is potentially another signal that might feed into the Bank of Canada's rate decisions. Are we going to see a bigger than expected rate cut in October? Will they be going 50 basis points rather than 25? Either way, the markets are signaling that we're going to be getting cuts basically at every meeting, probably until June. So, it's very likely rates are going to be trending down relatively quickly over the next 6 months. So, when we think about all of these policy measures, the question is, well, what's this going to do for housing in the new year? And my instinct is the housing market will be busier next year than it is today. I mean, I'm not suggesting we're going to have 30 offers on homes and prices surging 20% per year. But right now, the market's quite sluggish. There aren't a lot of buyers out there. Homes are sitting in the market longer. My instinct is homes will be selling a little bit more quickly. Things will be a little bit busier, but not necessarily, rapid surge in prices is my instinct. Again, but I think ultimately, one of the key things that's going to determine how things evolve over the next, 12-ish months really has to do with how the government handles this slowdown in new construction sales, because the decline in new construction sales will eventually lead to fewer housing starts, and it already is. But if that continues over the next 12 months, again, if we have thousands of condos and houses being completed, but we're not starting new ones, well, we're going to start to see layoffs in the construction sector. And that is a very big sector. It has a big ripple effect on our economy. So I think the one big question is going to be, what, if anything, is the government going to do? I mean, obviously, if they just sit around, do nothing, and allow the pre-construction housing market or the new construction housing market to collapse, this will have very negative side effects on the economy. We'll see job losses. The sentiment will be negative. And potentially, you see some downward pressure on prices. My instinct, however, is that the government's not going to do that. I don't think they're just going to sit around. I think they'll do anything they can to stimulate housing as an excuse. They probably even allow investors to buy pre-construction condos for 5% before they allow the condo market to collapse. Again, I'm just kind of somewhat joking, but my point is I think they'll just throw everything at this problem to stimulate new housing construction. So structuring deals with developers, anything that will kind of encourage developers to build more and probably make it easier for investors to buy pre-construction housing. So that is what I suspect is going to happen in that sector. But to me, that's the one sector where I think we should be more worried about when it comes to potential negative economic side effects and impacts that has on the housing market. But my instinct, at least from my outlook, is I suspect January, February is going to be a little bit busier than today. Many of our clients are feeling that sentiment as well. Many who have places that they want to sell or need to sell, their mindset is if they don't sell now, they're going to wait till January, February, which I don't think is a bad decision. I mean, I think some people who are very pessimistic think the market's going to crash will say that's terrible, but obviously nobody really knows what's going to happen. And again, I think if you leaning towards that the market is going to be a little bit busier, which I suspect it is, sales are very sluggish now. And I think, even if we have some negative economic news, I think that will be more than offset by the mortgage stimulus, by lower rates, by all of these factors. So I suspect things will be a little bit busier in the new year. Hope you found that helpful. If you have any questions, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.